With CPI inflation in September printing at 7.4%, the price gauge has been outside the MPC's mandated 2 to 6% range for 3 successive quarters. This means that the rate-setting panel is deemed to have failed to achieve its inflation target. According to the RBI Act, a letter must now be written to the government outlining reasons for failure, proposing remedial steps, and providing a timeline for inflation to be brought back to target. The MPC's additional meeting today is likely being held to flesh out the details of what the RBI will say to the government. The RBI has indicated that it may take around 2 years for inflation to head back towards the 4% target. Incidentally, CPI inflation has been above 4% for 36 months. While the surge in global commodity prices following the Ukraine war posed a huge upside risk to India's inflation, core inflation too was well above 6%. Core inflation strips away the volatile components of food and fuel. So far in 2022, the MPC has hiked interest rates by 190 basis points. For over 3 years, the RBI maintained liquidity in the banking system at a large surplus, as it sought to boost economic growth, especially at the height of the COVID-19 crisis. Going by the RBI's latest data on liquidity management, the days of easy money for banks are over. In September, banking system liquidity briefly slipped into a deficit for the first time in 3 years. The liquidity conditions have tightened much more in October, with the central bank infusing an average of Rs 58,200 crore into the banking system for the last 10 days of the month. The tighter liquidity comes amid booming bank credit growth, increased demand for cash during the festive season, and the RBI's dollar sales in the foreign exchange market. Banks are now rushing to raise deposit rates to garner funds amid the shrinking pool of liquidity. Raising deposits from the market has also become a more expensive affair, as sparse of funds have translated into a surge in money market rates. Talk about the pressure to increase deposit rates, and the future trajectory of banks' interest margins springs to mind. Results of the majority of private sector banks in the second quarter show a stellar rise in interest margins and profits, as banks were quick to pass on the RBI's rate hikes to those seeking loans. Banks were much slower to transmit the policy rate hikes to deposit rates, thereby pushing up interest margins. With the economy recovering from the scars of the pandemic, the proportion of bad loans also fell.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.